making it. I see you strutting down the street, you looking Portland. I walk the other way. I don't wanna bother you with my sobriety. We used to share the summer nights, riding our stolen bikes. But now I don't impress you. I'm like a bloke from 1999. I only see you when you're walking to somewhere. You're so restless. What can be over there? I only see you when you're walking to somewhere. You're so restless. It must be special there.
What up? Day 4, here we go. Yeah, come on now, give a little round of applause. Day 4, Wichita Startup Week. There's some energy, finally. Thank you. Hey, everybody, I'm James. I'm one of the co-founders, and there's Quinn's wearing the shirt. We got Ramsey. We got co-founders in the room. So welcome to Day 4, a Wichita Startup Week. This is going to be a big day of all kinds of cool things. The room looks a little bit differently today because we got some really cool stuff happening throughout the day. So just a couple things on deck for today. We have Brian McClendon, technology companies and startups in Kansas. You're not alone. Spoiler alert, Brian helped found Google Earth, and he was at Uber for a while. So I was looking at the schedule today, and we have a lot of really cool outside people coming into Wichita. So this is definitely a good day to get some great outside opinions. We have Tom Chapman, Maria Flynn with Techstars coming as well. We have our trade show happening at 5 o'clock. So we felt it was really important to highlight some local Wichita entrepreneurs who are just getting their start. So please go around and see those people and support those people and make sure that you're learning about the really cool things that are happening right here in Wichita. It's on all of us to support the ecosystem. It's one of the big reasons why we did Startup Week right here at Groover Labs. And then at 6 o'clock, somebody's winning $5,000 on the pitch competition, which is going to be really cool. Quinn's going to be a part of that one as well. So it's going to be a really, 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 really good day. But enough about all that. So just, before we get started, wanted to definitely thank all of our sponsors. So Wichita Startup Week is powered by Koch Industries. Now's the time to realize and celebrate your entrepreneurial opportunities. I have to say this all the time, but this is 100% volunteer-led and driven. So everything that you see here today was done by a volunteer, which I think is really, really, really cool. All the people that are in the room, it just speaks to the need and the passion that we all have to see this succeed. We do want to recognize our sponsors. Koch Industries is our presenting sponsor. EY supported our hackathon. Cox Business Trade Show or Pitch Competition, which is tonight at 6 o'clock. Don't miss it. Fidelity Bank and Martin Pringle for sponsoring our tracks, our various tracks. Voltage and Emprise Bank for powering our trade show. We have our gold sponsors, which you're seeing on the rotators in the back. It's worth noting that this session is part of the Martin Pringle track. They're a regional law firm headquartered in Wichita, started in 1951, but they have offices in Wichita and the Kansas City area as well. They have 40 attorneys with expertise and all kinds of things like the startup community. They've gotten a lot of great shout outs this week already. However, this one is the 11 a.m. session, Angel Investing in Wichita 101 and how to get plugged in. Really excited to introduce Quinn, who's going to be our speaker today. Quinn Robertson is a senior associate at Nextus and actively manages its angel investment syndicate, Accelerate Venture Partners. He helps entrepreneurs validate their business, connect them with resources, and he just wants to see this ecosystem continue and thrive like all of us. Help me welcome Quinn. Quinn.
All right, is this working? Am I coming through? Rock on. Awesome. All right, there you go, buddy. Appreciate it. Let's see. Oh, maybe. Uh-oh, you never know. If I was a slide deck. Anyway, we'll get started without that. You may not know me. I think I know some of you in the room. I'm super casual, so I'm not going to be the eloquent walk around the room speaker type of thing. I'm honestly, if I leave this chair, I'm probably going to be surprised. So quick little, background for me, for maybe folks who don't know. I spent probably 5 years at Koch Industries evaluating startups for how they could be used to make Koch Industries better. So I was literally sitting in like the customer shoes for you people who are selling things to businesses. I was that guy for a while. And that's been a really, for me at least, I think that's been a really interesting driver for how I look at businesses and how I evaluate them. I think it's also a value prop that I can give for businesses. So if people are trying to figure out like, how do I come across to a customer? What are they probably caring about? What are they hearing whenever they are kind of hearing me pitch to them or something like that? I always like to give feedback on that front, and it helps me, I think, as I look at angel investing on that front too. So I'll start off with who all is in the room here. This was intended to have investors in the room, prospective, existing, all of that. How many of you in the room are actually founders? Like 80% of the room. That's interesting. Coming to see like what the other side of the table looks like, what they're thinking about. Yeah. So I'm curious and this is something I just try to do as well. I need 3 pieces of information or 3 things that folks want to get out of this session, so I make sure to hit on it. So, whether you're sitting in the room as an investor, sitting in the room as a founder, just wanting to learn about kind of the investing side of the world, what's something that you guys want to get out of this? It can be super vague, or it could be like super specific.
I'm currently a founder, but my long-term goals include launching and then investing, so I'm here to get the basics of how to do it.
Cool. Okay. I'll definitely be able to walk through some of that. Who else?
Yes.
Yeah.
I want to know the do and don'ts of investing.
Okay.
Who should we invest or who shouldn't invest for?
You want me to tell you how to spend your money? Okay. All right. Yeah. One more. Tona.
I'd like to know the landscape of the local angel investing.
Okay. I can definitely get into that. So let me go through, as I look at, this is a little bit of my story, but then it's also a little bit of what I think, most of the angel investors that I work with are as well. So the quick little kind of what I do now. So I run a local angel investment community. We've got about 40 members as a part of the group. We meet monthly, get a couple of founders in front of the group, and basically every individual gets a chance to make their own investment decisions or not. And I can, we help provide some information, but everyone's really figuring out, I'm doing my own evaluation on whether or not I want to invest in this business. But the 40 members that we've got are all involved in the group for, very different reasons. But why they get involved in angel investing, I think is very, it's very telling of what their motivations are as well. So like when I look at my general beliefs, I have a fundamental belief that you all that are out in the room right now, the entrepreneurs and the founders, you guys are a force of nature. When we look at the data historically, entrepreneurship, new companies getting built are the primary economic growth engine for a community in any way, shape, or form. And so, when I talk to a lot of investors, why they get involved is very much around wanting to be a part of that support mechanism to help them continue to grow. There are certainly, monetary and financial reasons to be involved with all of this, but I see a lot of people really wanting to get involved to be a part of that founder's story and be able to say, I'm so happy that I helped this person that I got to know somewhat personally, build and grow an amazing business on that front. So, you think about it sometimes as, there are angel investors. And so if you're an angel investor now, if you're looking to be an angel investor in the future, your why can be very personal, and there's no wrong answer to that one, I think is part of the message with some of this. So if you're wanting to get involved with angel investing, just being that support mechanism is a very positive way, I think, to be involved with all of this. And I spent about an hour earlier today doing an Ask Me Anything with some founders that we brought into town. And where was I going with that? The message that I told them was, especially at the early stages where some of you founders may be at right now, we as angel investors at the early stages are like this much money and this much like other value that we can add to you. And so when you're thinking about yourself as an angel investor, like your background, your experiences, and just the knowledge that you've been able to accumulate over an incredible career, that I think is something that, why you might want to get into angel investing and what value you can add to folks. Don't discount that. So definitely, recommend that. The other thing I didn't say at the very beginning, if you have questions as we go, like ask me, because I think I've prepared 20 minutes of content. So if I'm just up here blabbering, we're all going to have, we're all going to be talking out there having coffee anyway. So ask questions as we go on that front. The other thing, and one of my personal missions that and admittedly why I wanted to do this session, is I have a fundamental belief that more people involved in investing in startup communities and startups here in Wichita, here in the region, well-equipped with the right information and knowledge to do so is better than less. And you think that that's, it's sort of obvious on that front. But right now, I've got a group of 40 people that are really an incredible backbone in angel investing in this community. I want that to be 100. I want that to be 200. I think that's an amazing goal to have, and I think it serves a broader purpose with all of that too. So I mean, that's sort of a little bit of background as well on kind of why I see folks get involved with angel investing. Certainly, there's financial returns to be involved, but that's really like 10% of the story on that one. Let me see here. Quick little background as well, just as it relates to kind of where we sit in the ecosystem of a founder looking for money from other people. So you look at like kind of the early stage is really on sort of the left side over here, and then you kind of move up to more proper institutional money that may exist. It's sort of this upside down triangle of there are a ridiculous number of angel deals that happen all the time, and very, relatively speaking, relatively little capital that goes into all of them. But they're the foundational starting point for every business, and beyond just friends, family, and a sucker uncle that you got to invest in your business. This is absolutely a place where I think without this type of capital supply for a lot of companies, we're not going to see the next Coke Industries in Wichita, Kansas, unless you start at the very beginning. You see sort of the other side, for maybe some of the founders in the room or even the investors in the room. There is a lot smaller deal flow, but a lot more amount of money the later that you get in your business and your business as you're running. Those are the ones that get talked about all the time. You see the splashy headlines of X company raised, $100 million, $200 million. And those are all well and great. But frankly, without the left side of that pendulum, they would have never got there, more than likely. And so I say this more as a representation and a continuation on the last slide of like, why do I want folks to get involved with angel investing is because you hear the news stories and all of this, but there's just a group of what I might call unsung heroes, unsung helpers that are angel investors that, you're not in the news very frequently, but, you are going to be the reason why the next Coke Industries exists in Wichita or Cargill or whomever you want to say on that side. Let's see. Tactically speaking, and this is something that I'll also say, how many of you, I guess you don't even have to raise your hands. You founders that are in the room, do you consider yourselves angel investors? Where's an answer? No? You've heard of a couple of things going around in Wichita right now. There's a company, Knowledge as a Service, that's raising on an equity crowdfunding platform, right? I've talked to a bunch of people in the last few months, and my message to them is how founders get money has drastically changed in the last 12 to 18 months, more so than it has in the entirety of human history. And the reason I bring this up with crowdfunding, with other types of mechanisms that exist, if you want to be a part of an angel investment community, you have the way to go and do it right now. It doesn't matter whether you're investing $500 or $500,000 into a company. The skills, the tools that you can build by just being a part of all of this, you can do it right now and you can start to build that. I don't know if I see Trevor in the room. If you know of Buddy Brands, he did a crowdfunding campaign for inventory like 4 or 5 months ago. And I put in like a couple $100 because I'm like, it sounds like fun. And, I saw that, and I'm not maybe what most folks may consider a traditional angel investor, but I got to be in and I got to be involved, and I got to be a part of the roller coaster that he went on as a part of that campaign. And so, I say all of this as we get into some of the tactical things. This isn't for the people who are already angel investors or high net worth individuals or whomever you may bucket into all of that. You have the ability to participate now. And, I definitely recommend getting a chance to just get in and learn is certainly a positive. So that's my prequel for all of this. When we talk about angel investing, I wanted to get think about it as no different than, investing in your stock portfolio or your bond portfolio. It's just going to be a high risk, high reward, small component of it. So when you think about that, there are some folks that say, this is my play money, this is my casino money. I don't think that's wrong. I think everyone has their own reasons. I tell a lot of folks, view this as your high risk, high reward portfolio, no different than you would if I'm going to invest in crypto or, Bitcoin or something else like that. So a lot of folks say, over the course of, maybe 5 years of investing, I'm going to dedicate 1 to 15% of my portfolio toward this type of asset class. And so that's going to be, some folks come in and say, I'm going to invest in 5 companies and I'm going to put a bunch of chips on the table and hopefully 1 out of those 10 hits it really big. I think I tell a lot of folks, get a lot of smaller chips on the table and view this as a portfolio. Invest a little bit into a lot of companies. I think that there's value that you can add to those companies if you cast a wider net. And then I also think just from a pure kind of money management perspective, it's kind of a more appropriate approach on that side too. But when we really look at it, angel investment, you're likely, if you are an accredited investor, likely going to be investing anywhere from $5K to $25K into an early stage private company, right? I'm going through like the super 101 stuff with all of this. So just trying to make sure that there's a foundation there. These are high risk, high reward investments. We look at nationally, depending upon who you talk to, I think every new business that starts, 1 out of every 2 is going to die in the first year, and like 7 out of 10 are going to die within 3 or 4 years. So when you're getting involved as an investor in all of this, you have to know that this is high risk, high reward. Your goal is to find the little diamond in the gold mine. Diamond in a diamond mine might have been a better analogy on that one. But anyway, but you're looking for that one that's likely going to return your entire portfolio on that one. And so also know that as you're getting involved, your losers are going to show up first and your winners are going to show up a lot later. So I think a lot of people get started with angel investing and they make, 4 or 5 investments and then 3 of them go to zero or go bankrupt or whatever in the first year. And you're like, oh gosh, what's happening to my portfolio? Did I just literally put all of this down the toilet or something? It is a natural part of all of this that, your winners will take longer to harvest on all of that. So I think the message really is continue to think about it as, the things that stay in business longer just have a larger and larger chance to likely succeed and make it really big on that front. So don't get discouraged if you get started and, you feel like your initial track record is not good on that one, because that's just a natural part of all of this, I think. The other thing that I think is also important, both when you're looking at angel investing and if you're a founder in the room thinking about this as well, there are multiple types of capital and investments that you can be a part of. We typically talk about, investments that are what I might call typically equity investments. So I'm an angel investor. I'm going to invest $25,000 for a portion of someone's company with the expectation that they are going to grow really, really, really quickly. And in 5 to 7 years, which I think some of the investors that have been doing this for a little while may say, 5 to 7 would be really good. 7 to 12 might be a better bar on that one. But at some point, they're going to grow really, really fast, and then I'm going to get a really nice, return on my money at that point. When they either going to IPO and they're going to ring the bell on, the NASDAQ or something like that, or they're going to get bought by a Microsoft, a Google, or something like that. But that is what I think most people consider a more, traditional way of looking at these investments. I think that it's a good slice of the world, and it's a good way for you to look at it for a lot of the types of investments that I think may come across your desk. I think that as we get more and more involved, both in the Wichita ecosystem and then trying to serve a larger amount of founders, a larger breadth of founders, there are other types of investments that you can be involved in that can deliver a really nice return. And I think it's all about finding the right type of capital for the right type of company. So when you look at, the typical equity investment, your expectation with that company is I need to grow it really, really quickly. And you're basically strapping a rocket ship on the back of them. And sometimes that goes well, and sometimes it blows up. And so, there are certain companies that you're looking at from an angel investment portfolio that maybe don't fit that model. So I say that to introduce, there are other types of investments that you can make. So who all's watched Shark Tank, out of curiosity? We've all watched Shark Tank. Everyone know Mr. Wonderful? Yeah. So, his big deal that he tries to do is, give me, 1, 2, 3% of your revenues until I get 2x my money back. And then maybe I'm getting a little slice of the company at the very end of that, or maybe I'm, fully paid off. He was the one that I think started sort of this revenue-based loan type of concept, or at least made it incredibly popular. It's absolutely a mechanism that a lot of companies and a lot of founders can benefit from. They don't have to grow at all costs. You're putting an appropriate, type of incentive structure for them to grow revenue, which I think, as we've heard from a lot of our other presenters, getting revenue in the door from your customers is an amazing source of capital, and do that first. And so I think, these types of revenue based loans are a very healthy balance to your portfolio as well, that you're getting returns in year 1, 2, 3, 4, 5, where, you can start to get, your money back with a nice little return multiple there, where some of your other maybe more traditional equity investments are going to take a little bit longer. The final thing that I think as well that we're starting to look at more, at least here in some of the Wichita companies, is an inventory financing deal. And basically what this means is that as opposed to a founder raising money to buy inventory to sell off in the next 12 months or something like that, they're giving away a chunk of their company for that. That's a big, that's a tall ask, and a tall, it's a high risk of capital on that front. And so what we've started to see a little bit more as well is if you've got a company that maybe walks in your door, or maybe you're a part of our group or something like that, if they're raising money for inventory, we've seen deal structures that are not, an equity investment. It's, I'm going to give you $100,000 specifically for the inventory that you need for the next 12 months. And as you pay back that inventory, I get 1.2x for every, whatever the cost of that is. So at the end of it, I'm getting 120K back at the end of 1 year. That, and then also you founders you still own 100% of your company at that point. And you don't have to pay back any of that money until you're actually selling stuff. And so for us as investors, we can look at this as, well, the stock market's returning 7 to 8% on an annual basis. I can get 20% of my money, or I can get a 20% return in a year. that's really cool. That's a really nice return and actually probably backs into the same type of return that I might get for a 5 to 70 year exit on some of those equity type of companies. So the reason I say all of this is from an investor's point of view and a founder's point of view. Look at the right type of capital for your business that is going to align the appropriate incentives both for you and for the investor. If you're sitting in the investor's shoes, make sure your risk return is appropriately kind of with what makes the most sense on that point, and also have the right expectations of, if you don't think this company is going to get bought by Facebook or Amazon or Google, a certain type of deal structure just may not make sense for them and puts you sort of at a disadvantage on that front. And then for you, the founder sitting in the room, make sure that that you have investors that are aligning what your long-term objectives are for the company and align those deal structures that make sense to do so. I've talked for 25 minutes so far. What questions do you guys have? I've got more content to go through, but I can nix it if y'all want to talk about something.
As far as the revenue-based or the inventory financing,
Yep.
Is there anything like structured in Wichita for either of those?
So right now we have put a couple of those deal structures in front of our group, at least. It would be one of those, we would probably figure out how to service it on the back end as we did it. There are also a couple of kind of what I'll call crowdfunding platforms where you don't necessarily have to go through a local angel group or a whatever. There are platforms out there that will help service those types of things. Now, they do come at a cost, right? There's a little bit of a fee involved. So I would say, both, we as working with my team, would learn together as we went through all of that, which is certainly a path. Or you can go look at the crowd to potentially do these types of models. And there's a couple different platforms that would allow that. Yeah.
2 questions. For the equity investments with angels, do you typically do like safe agreements? What is the...
Yeah, so there's a couple of different ways that I think about kind of equity on that front. For those who aren't in sort of the angel investing or just the general kind of early stage investing world, there's probably 3 types of instruments or types of investments that may exist. One of them is a preferred equity investment. You're buying an equity stake in the company and you, upon financing them, have that equity ownership. That's probably the most traditional, and that's probably what's been around the longest. In the Midwest, there are a couple of other alternatives, especially for the early stage companies. When I think about folks who are pre-revenue, pre-product, maybe have a little bit of revenue, another type of investment that exists is basically a loan that converts over into equity at the company. So I'm going to give you $100,000 in a loan. I'm going to get interest on that loan. And then at some point in the future, whether it's likely their next capital raise or a certain revenue milestone or something like that, then I'm going to convert over into equity at the company. And then it's no different than kind of the first example there. So those are kind of a couple of options. The SAFE agreement that you mentioned, very similar to a convertible note. Very popular over on the West Coast, very popular, I think, on the East Coast as well. Starting to get a little bit of traction in the Midwest. I think the primary, I'll give my personal kind of view on them. Safe investments are, you can categorically think of them as a quicker, cleaner, convertible note with no interest. So I get a future equity in the company and then I'm going to convert over at some point in the future. I think the risk that some of the investors in the Midwest see is there's no maturity date on that SAFE agreement. So you, as the founder, could build up an interesting little profitable business after my investment. You're not growing quick enough to raise other capital, but you're also not going so far south that you're bankrupting the company or something like that. So I, as an investor with a SAFE agreement, there's a little bit more risk involved with that I could never turn into equity in your company. And then I basically just turn that into a zero. So I think there's a little bit of both. There's positives that come with it in how quick and clean and easy it is. But there's also some risks that are involved from the investor's point of view. Does that help answer that?
And then with crowdfunding, when you went But how does that affect you as you go into like a Series A?
Yeah, and this is, I think, helpful for the investors in the room as well. I think we're early days in the crowdfunding momentum. I think a lot of crowdfunding that I have seen in the last 12 months has been very product-based businesses. So inventory, I'm selling a widget or something like that. Those types of companies, generally speaking, are just a smaller percentage of a venture capitalist's investment portfolio. So I think naturally there's just like a separation of, if I'm doing crowdfunding, I probably am not, like, venture capital investors likely aren't looking at me in that regard. We've definitely seen software companies and some of those types of groups do crowdfunding. I am hopeful that they don't view it as really, any different than an angel investor coming in on that front. I think right now there are sort of some red flags that with different crowdfunding platforms, that if just naturally you don't have as much help, what I might say. If I've got 5 angel investors that invested in me, they're probably helping me, rolling up their sleeves and helping me build a business. A crowdfunding platform naturally just doesn't bode to that type of assistance. So I think the red flags or the yellow flags that exist are more around that mindset of, do they have the right people around them helping them, less than what type of capital is on the cap table or something.
Because like we've heard mixed opinions, and if one opinion was you crowdfund and then you go to raise like Series A, then you have to get everyone that crowdfunded for you to agree to the terms of the Series A.
It depends. Some, and 30 seconds on this. There are some crowdfunding platforms that every person owns a chunk of the company. There are other platforms where they basically group everyone together, and then I don't know if this is accurate, but like WeFunder, as an example, would be the decision maker for that crowd of people at that point. So I think it depends on the platform, but there's also other ways that you can kind of get rid of that, and I can chat with you offline on that one for sure. Yeah.
I have a product-based company.
Yeah.
And crowdfunding would be ideal for me because I get to make pre-sales and then I'll also show the demand for the product.
Yeah.
But my impression is you need a good social marketing prior to, and I'm an engineer, so for me to get on social media and build that up, while I'm still trying to build a prototype, is not viable. Would your company, your group, help in building that crowdfunding campaign?
We've not yet done one.
Hey, Quinn, can you repeat the question just for the people
yeah.
online?
For the people online, the question was around, we've got someone in the room who's got a product-based company looking to do crowdfunding. You likely do need a good social marketing type of capability within the business to do that. We've not done one yet before. What I would likely do is refer you out to some of the kind of local agencies or groups around town that might be able to help you with that. I don't think you don't want me running your social media platform. Let's just start with that. I posted on Twitter or on LinkedIn once in the last 6 months, and it was for this event. So rock on that side. So what I would say is there are certainly people that we could probably refer you to on that one.
Okay, do you have a group though? Is any of the group, from what I understand, has any of the group done something similar?
Not to my knowledge. No, not to my knowledge. Yeah, we can absolutely chat afterwards. Yes?
As an angel investor, what would you say are the top 5 factors I should investigate in a company before I make a decision to invest?
I'm really, really glad you asked that, John. That's my next slide. It's like I couldn't have planted that better. So here, when I think about, you sitting in the seat of angel investor, here are the few things that I look at, and frankly, they are very different for the type of investment that you're making on this. If you are going to be investing equity into a company, or soon to be equity in a company, you're in there for the long haul, right? So your belief is, I need to have a belief in the founding team. I need to have a belief in the space and the product that they're in, and that they have a moat around them, or can build up a moat around them, that they can continually grow really, really quickly. So the standard way that people sort of look at these things, when I think about the team, it doesn't have to necessarily be on the founding team, but at least the capabilities that exist, you need the three-headed monster. You need someone who has a really solid technical background, that if you're building a software company, you need to have that on the team to actually build out that software capability. You need someone who knows the business side really well, whether it's sales, whether it's marketing, whatever. How you get that product to market is a critical component to that business. And then the other side of it is, I want someone who's got industry knowledge. And I'll put that with a little bit of a caveat as well. You need to know about the industry. That doesn't mean you have to have been in the industry. So if I'm building a construction company or a construction software tech company, that doesn't necessarily mean that I had to have worked for a construction company. Frankly, if you're a founder coming in from the outside, you may have a different insight into that market, having not had the baggage of the industry for the last 10 or 15 years or something like that. So, but either way, those are sort of the three things when I look at a team. When I think about the problem and the solution, and solution could mean product, it could mean software solution or service or whomever. I think the primary component of this is, are you solving a problem that hurts people that they're willing to spend their money on? And is it a critical, painful problem? As I've chatted with founders over the last 2 years, the biggest, and I think some of the data even supports this as well, the biggest reason why companies fail is not because of a lack of capital. It's because I'm not solving a big enough problem that people are going to pay me money for on that front. So as you think about that, put yourself in those shoes of the customer. Do I think this is a really painful problem? If it's a company that's helping, dentists, I'm making up an example here, go talk to a dentist. Would you pay for this? If you didn't have this tomorrow or did have this tomorrow, does it meaningfully change you? So those would be sort of the things I'd think about. The market as well, and exit opportunities. If you are investing equity in a company with the expectation that they are going to get bought, then who would potentially buy them? Why would someone buy them? Is there a specific gap in their product offerings that they slide really nicely into? And then the market size, I think that's probably a different determination on some of that. Long and short of it, big market, go after a big market. And then the final thing that I think I spend most of my time on when I work with founders is traction and validation. You're building a company that is serving a need for specific people. If it's very painful and you are solving that problem, naturally you should have outputs and results that result in that. So I probably say I spend most of my time talking about how are you very quickly learning and getting folks onboarded onto your software platform or buying your product or whatever, because that to me is an output of being a quality team, having an appropriate problem to go after, and the exit and market opportunity is a little bit different. But those to me, it's kind of like the top three are inputs, and the last one is sort of the output. And so that's sort of my at least perspective on all of that. If you're looking at a loan deal, so a revenue-based deal, more so with like an inventory financing type of deal, it's a debt instrument. I may know nothing about, or frankly care about, whether or not they exist in 5 years, right? That's the wrong way to put all of that. We want all of you to succeed. But for me to get my money back, they need to have an appropriate pipeline of customers that is going in a very short window of time. That's going to help me get my payback over the next 1, 2, or 3 years. So you're looking at, their ability to pay back. You're looking at their cash position that, if they're barely breaking even and they need inventory and you're adding a 20% addition on top of that, they need to grow a little bit in order to be able to service that extra 20% from a cost perspective. And then, so existing revenue and demand. And then also, for companies that have any level of seasonality, are you on the back end of their giant selling timeline? And now they've got, 4 months or 5 months or 6 months where they're not going to get hardly any revenue walking in the door. So those are the things that I might think about related to a loan type of structure. Did that answer your question? Cool. Trying to think. I've got 5 more minutes. Yes? Okay. How to get involved. If you want to go at this, what I might call kind of by yourself, and this could be whether you're a founder, this could be whether you're a new up and coming investor, there are ways to get involved. There are, tons of different crowdfunding platforms out there where you can, build the muscles and not have to write really big checks. And so you can sort of learn with sort of a low risk opportunity related to that. If you're wanting to get connected to some local companies here, we've got a Slack channel, Startup ICT, is that what it's called? Something like that. I'll send you a link if you want to, but there's basically a Slack channel where almost all of the founders here in Wichita kind of congregate on. So if you want to learn more about them or get connected with them, go in and join that. Other ways that you can do that, and this is, I'll even just jump to the bottom item here. Become a mentor and advisor even before, going and actually putting money on the table. I think that at the earliest stages of a company, the value that you can add to a company of your knowledge, your skills, your expertise, your connections far outweigh the amount of capital you're likely putting into the company at this point. So that would sort of be my advice on that side. You've got different ways to be involved. The world is flat. You can invest in a company in San Francisco or Beijing or whomever, having never met them before, and you have the capability to do that. Or you can roll your sleeves up here in Wichita and be really involved as well. The short little tagline for me and our group, and this is just something that I wanted to put out there. So the group that I run is called Accelerate Venture Partners. We've got about 40 angels that are a part of the group, most of them here in Wichita. We basically run as a group that is, myself and the rest of my team out looking at anywhere from 50 to 100 deals a month, both in Wichita and across the Midwest. We get it down to 2 companies a month, and it's Shark Tank up here at Groover on this stage on a monthly basis. The kind of the top 2 every month pitch to the group. Individual investors get to sort of make their own investment decisions. We'll help with the investment process on the back end. We've had, I think, 10 portfolios 10 companies in the portfolio in the last 2 years, getting ready to add an 11th right now. We've put in about $3 million over the last few years. So we're typically investing as a group 100 to 300K. You get a chance. My favorite day every month is the 3rd Tuesday sitting in here and hearing different angels and their perspectives on different investment opportunities. We may have a medical device company. I know nothing about that space, but we have doctors or whomever that may can provide just the most interesting insights into all of these types of things. So it is for accredited investors, and this is just more of a regulatory thing. General solicitation, you have to have an accredited status to be able to do that. But if you are an accredited investor, if you want to learn about that, reach out to me as well. We're also trying to create a kind of a second type of member that is, you don't have to be accredited, but you can get in and learn and be involved on that front. We're still working out how exactly we do that. So if you think at some point you want to be an angel investor, reach out to me and let me know. And this is more me trying to figure out how can I best serve you on that front. And the objective with all of this is really bringing a level of professionalism versus, as opposed to your buddy pitching you something out on a golf course, which I think happens more often than not on some of that. This is really bringing kind of a professional take on all of this here in Wichita. So I'm trying to remember, your question was around the landscape here. Okay. So that's probably a lot of it. There's probably a few more angel investors, individuals that are running around Wichita. If you know the right people, awesome, you get connected with them. If you don't, it's a little bit hard on that front. So that's one of the things most of our investors, there's a couple of them that may want to do that. A lot of them, this is a little bit of like a lot of them like to be behind the scenes on that front. And this is just sort of like the Midwest mindset, right? Like I like to just sort of be the helper on the back end, but not necessarily out in public on that front. So there may be a few folks that I might be able to make specific introductions to, especially if there's specific things that you're looking for, but we don't like publicly list it or anything like that.
So the answer would be talk to you?
The answer would be talk to me, yes. And that's whether you're wanting to talk to an individual, if you're wanting just, connections with investment opportunities, just to potentially get in front of our group, reach out to me. One more.
So just as far as angel investments go, none of the deals have like some of the extra pieces that some angels can get, or you kind of had it up there where the mentorship is huge, by far one of the best things I've gotten. I've had angels come to me with kind of other offerings where it's like services or something that they're trying to include as well.
Yep.
Where's the line on that for like trying to actually give out an angel investment versus starting to now make money? Like you're not really investing at that point. I mean, like
yeah, it's a case by case on that one, and this is someone who can provide a good service to you with your incentives being aligned on that front. I don't think there's any issue on that side. Now, some of them are willing to do it out of the goodness of their heart on their free time, which is certainly one thing. But if they get more heavily involved, you can view them as strategic partner of supplier, vendor, consultant, whomever, but then also be an investor as well. So I don't necessarily say there's like a hard and fast rule on that one. It can definitely get dicey with the wrong structure in place. But I couldn't give you like an exact kind of one way or the other.
So if I were to make an angel investment, is that something that development and other like backgrounds that I have, like obviously if I just care about the company, that's my perspective, I guess. But like if it's to a point, I guess there is an opportunity to have like other than equity based or like actually getting hired on. Potentially founder.
Yeah, there's a whole gambit of how, an angel investor. So as an example with our group, we had one of our members become the CEO of one of the companies that we invested in, or not that we invested in, but we at least looked at. We had another member join a board, and I think another one that became a customer of the groups that were involved in our group. And that was regardless of if we invested in them or not. So I think there's a ton of different ways that angels, quote unquote, whatever that means to you, can get involved in your company on that front. And that doesn't mean I'm an equity holder in the company as well. Yes?
What does it require for you to become an accredited investor? And that sounds very intimidating to me. Like I don't have $1 million sitting in the bank.
Yeah, so the general's kind of definition for SEC accreditation is $1 million in net worth or $200,000 in annual income for the last 3 years, I think is the standard definition. There are certain types of offerings that exist that you are only allowed to pitch this to accredited investors. Crowdfunding takes a very different lane on all of that, where it's open up to anybody on that one. They've made some recent changes to the SEC accreditation such that if basically you're a financial advisor, you have a Series 65, Series 67 license or something like that, you can be accredited without meeting kind of the net worth requirements. But basically it's just sort of an attestation of I meet one of these check the box items. And that's kind of how that exists. You're not necessarily paying a fee to be accredited per se. It's just more kind of a self-attestation on that point. But I will say, to your point, that's why I'm really interested in crowdfunding. You can be involved and play like the big boys, quote unquote, right? You can do that without having to be high net worth individual. You can learn, build your skill set, build a nice little portfolio for your own personal 401k or whatever, right? You can do all of the right things without necessarily getting to that level there. And so that's my primary message with all of this is get out, get involved. There's no reason you can't right now. And if Ramsey was to go raise money on a crowdfunding platform, if a bunch of other founders were investors in him, that would be super cool on that front too. So I hope we continue to do more of that. So after all of this, Quinn at nexus.io, you can meet me afterwards or something like that if you want to chat. But if you want to get involved in any way, let me know.
For Quinn, please. Yes, sir. Well, I learned a lot there. Quinn, is a small token of our appreciation, you get this wonderful Wichita Startup Week blend by Reverie. Reverie Roasters on Douglas. They're so cool over there to do that for us. So,
Awesome.
Hey, thanks a lot. We really appreciate it.
Thanks.
It's worth noting that, we got an hour break, but if you've never been on a tour, if you've never been here before, Groover Labs is doing tours at noon. So you can go see the makerspace and all the other cool stuff that they have going on. Then we start back up again at 1 o'clock. It's worth noting that all of our sessions after 1 o'clock are all from out of town. So we're getting a really cool outsider perspective as well. So thanks for being here. We'll see you all back at 1 o'clock.